Hello and welcome. In this section, you will discover what Forex actually is. You will learn about the history of Forex. You will understand the difference between majors and minors. And you will get an idea which opportunities await you as a Forex trader. Forex is an abbreviation and stands for Foreign Exchange Market. It's the global marketplace for trading foreign currencies. This market is not located at one place or with one central exchange, but instead it's constituted by a global interbank network which operates around the clock. In the foreign exchange market, we witness a daily volume of an incredible $4 trillion each day. It's the most liquid and powerful market in the world. Many speculators deal in the Forex market, but one of them is still being called the man who broke the Bank of England. In 1992, along with a few other investors, George Soros anticipated a devaluation of the British pound. So much, in fact, that Britain would eventually have to leave the European monetary system. With large sums, he entered a bet against the pound, and this put a lot of pressure on the exchange rate. At first, the Bank of England raised interest rates and made every attempt to prevent a sharp sell-off by buying pounds itself, but to no avail. As a consequence, the Bank of England had to give up, and the British pound had to leave the EMS. In the end, the pound devalued 25%, and George Soros had earned an estimated $1 billion. But not only investors participate in the Forex market. Think about your next holiday. If, for example, you currently live in London and plan to travel to Sydney, Australia, you are going to need Australian dollars to pay for all your expenses down under. So essentially, you buy Australian dollars in exchange for British pounds. If the pound is strong, you will get more Australian dollars for your pounds. If the pound is weak, you will get less Australian dollars. It's very simple, in fact, isn't it? Now, if you look beyond tourism, you will see that also a lot of companies are actively engaged in the Forex market. Many international corporations which conduct cross-border business have to be able to hedge against the foreign currency exposure. So these companies trade foreign currencies against their own home currency as well. Most of these Forex exchange deals do not involve physical paper currency. Instead, it's all numbers, large currency volumes traded in an over-the-counter market. That means most Forex deals are directly conducted between two parties offside any central exchange. In short, we call this OTC. With MetaTrader, you can trade a multitude of currency pairs. A currency pair always consists of a so-called base currency, which is always the first currency in the pair, and a so-called secondary currency or counter currency. Whenever you execute a buy order in a currency pair, you always buy the base currency and conversely sell the secondary currency. That means that you always speculate on the rise or decline of a particular currency in relation to another. A big advantage in trading currencies can be found in the extensive trading hours. From Sunday 11 p.m. till Friday 11 p.m., you can continuously participate in this market without interruption. Now, let's discuss an example. Have a look at this Euro-US dollar chart. In this case, the euro is the base currency and the US dollar is the secondary currency. Whenever the dollar gets stronger, the exchange rate will go down because now you will get less dollars for 1 euro. On the opposite, if the dollar goes down, the exchange rate must rise. The price change in a currency pair is always displayed in pips. PIP stands for percentage in point. A pip is a unit of change in the exchange rate. Most major currencies are usually priced to 4 decimal places, and the 4th digit behind the comma in such pairs is called a pip. It is also important for you to know the difference between majors and minors. Majors are the most frequently traded currency pairs in the world. Minors have much lesser volume. Now, here are the currency pairs that we call majors. The euro against the US dollar, the US dollar against the Japanese yen, the British pound against the US dollar, the Australian dollar against the US dollar, the US dollar against the Swiss franc, and the US dollar against the Canadian dollar. And you know what's best? In foreign exchange trading with a Warengold MetaTrader, you can leverage your position. That means you can trade with a multiple of your own capital. In Forex, the leverage factor can be as high as 200, so the margin is 0.5%. But always remember, whenever you use leverage, you not only increase the upside opportunity, but also the risk. So we recommend you apply any leverage wisely and cautiously, especially in the beginning. So in this section, you have learned what Forex is, you have understood what majors and minors are, and you have discovered which opportunities lie ahead for you.